Dear friends, welcome to weekly view on markets. During this week, Nifty index touched all-time high during intraday, and then we have seen profit booking on Thursday and followed by on Friday. So, Nifty has corrected about 0.85% for this week. This is a healthy correction after non-stop rally for about 2 months. Market may consolidate for few more days and gather strength to scale newer highs in the coming weeks. Broader market also ended in the red. There was all around profit booking. So after a non-stop rally, this is a healthy sign that there is profit booking. So markets tend to be overvalued when it goes up continuously without any break. So this correction is a good correction and we should not panic. Let us look at performance of indices during this week. Nifty closed at 18,665, lost 160 points during this week after touching all-time highs, corrected by 0.85%. Bank Nifty closed at 43,662, lost about 315 points and closed with a loss of 0.72%. Mid cap index lost about 0.98% and 345 points, closed at 34,799. Small cap index lost about 1.08%, lost about 116 points, closed at 10,624. India VIX, that is volatility index, has slightly gone up by 3.60%. It is at 11.23%. So we have been trading with a low volatility for past 3 to 4 weeks. So we can expect that volatility may increase in the coming days. Let us look at sectoral performances. Most of the sectors ended in red during this week, except the financial services, which just managed to close flat. Media sector lost around 3.6%. The metals sector lost about 3.12%. Commodities lost about 2.48%. Oil and gas, FMCG, consumer durables all lost around 2 to 2.5%. Realty sector, auto sector, infrastructure, PSU banks all lost between 1 to 2%. Remaining all sectors were in red. They were down by about zero point 0.5 to 1%. Now let us look at technical charts. This is the daily chart of Nifty. We can see that market has for the first time dropped below this trading range. It was trading in a uptrending channel, and now it has dropped out of the channel. But I feel that this is a normal correction. After few days of consolidation or small correction, Nifty may pull back. But if we look at longer term chart, that is on weekly chart, Nifty has made a some kind of double top. It has touched the previous high, all-time high. So this double top technically indicates that there could be a correction, and this correction could come up to 18,000 levels. This is as per the technical theory. But we will have to practically wait for a few more days and see whether the market will pick up from here or it will go for a meaningful correction. This is a daily chart of Nifty Mid Cap Index. Mid Cap Index also has seen profit booking on Thursday and Friday. But these 2 days correction should not be taken as a weakness. This is a long-term chart of Nifty Midcap Index. We can see here it is still above the support levels and the pattern still indicating a up move in Midcap Index. If we can see here, it has continuously, there are so many green candles for past several weeks and one red candle is there for this week. So it should not be taken as a weakness in Midcap Index. This is again the daily chart of small cap index. Small cap index has also seen some profit booking from higher levels. But if we look at the longer time frame, that is weekly chart, the weekly chart indicates that after several weeks of green candles, there is one red candle. It should not be taken as a weakness in the index overall. So Nifty small cap index is also expected to go to higher levels, maybe after a few days of consolidation. This is a daily chart of Bank Nifty index. As we had discussed last week, from the higher levels of around 44,200, we have seen it is coming down. Bank Nifty has got good support at around 43,000 levels. So traders can look at buying Bank Nifty if it touches 43,000 or 42,800 levels. I expect that Bank Nifty should maintain this range and take support at around 42,800 to 43,000 level and pull back from those levels in the next week. Now let us look at some of the fundamental factors of the market. The market has touched all-time high on Thursday, and then on second half of Thursday, we have seen profit booking and small correction coming in the market. Basically, there was a hawkish commentary that came from Fed chairman due to the persistent inflation. He says that in US they may have to raise interest rates further, and also Bank of England raised interest rates during this week. MPC committee meeting, that is RBI MPC committee meeting minutes meeting was out on Friday, and in that meeting also they have told that if inflation, especially food inflation, continues to be high, they may be required to further hike interest rate in India also. This has had little impact on the sentiments on the markets, and we have seen profit booking. Banking credit growth for this year comparing to previous year is at 16%, which is a very healthy credit growth. And also we have seen better capacity utilization in the industries and private capital expenditure has started. That is why we are seeing the banking credit growth demand. There is a demand for the credit growth in the banks from the private sector. So this is all good for the long term for the markets and the economy. In the short term, there will be corrections, but the macro picture looks quite good for India. And RBI dollar reserves is at 596 billions, which is quite comfortable positions. INR USD rate is steady at around 81.96. So for past several months, it is between 81 and 82, which is quite stable rate. And dollar index is also steady at around 102 to 103. Gold price is at 59,180 for 10 grams 24 carat. Gold price also after touching around 62,000 levels, it has been stabilizing around 59 and 60,000 levels. Crude price is at around 74.44. So for last 2 months, the crude price is also hovering from in between 75 to $80 level. FIIs have also booked profit during this week. Net they have bought only 4 crores during the week. DIS have bought 1,692 crores in this week in equity markets. So after hitting a all-time high, Nifty has shown some topping out signal. Expect small correction or consolidation for a few more days. After that, I'm confident that Nifty will pick up and we'll see higher levels in the market. So market sentiment gets a boost due to the partnership between US and India in many sectors like technology sectors, defense, research, and many other sectors where strategically India and US they have agreed. The Prime Minister visit to USA has boosted the sentiments of industry leaders and the markets. Many industry leaders are quite optimistic about Indian economic progress. So, only thing is that investors should have patience and they should learn to ride through intermittent volatility in the market and the corrections. So those who know investors who are patient, they will make money. So market is a mechanism where money is transferred from impatient investors to the patient investors. So we should not get scared of volatility in the market and sell our investments, whether it is stocks or it is mutual funds. We should not get worried about small corrections and sell it off. So we should have confidence that our country's progress is good. We are one of the fastest growing economy in the world, and we all should remain invested for longer period of time and learn to ride through the volatility to get very good returns in the coming months and years. So this is all for this week. If you like my video, please subscribe to my YouTube channel, give your comments, like the video, share with your friends. We'll meet again next week. Thank you.